Hey there, everybody. Welcome to today's Able's update. We're nearing the end of the quarter, so I wanted to answer a question that we've been getting a lot about the model performance that we've been featuring on the website as well in some of the videos lately. So today we'd like to take a slightly more complete view of the reports. We'll take a look at what is possible with the signals. And there are limitations to what we can take away from backtesting, but we should be able to take away also some key systematic characteristics about the signals to kind of help you understand. So real quick to start, the model performance on a monthly basis really should kind of just tell us why we want to pay attention here. We've seen phenomenal results this year. And the standout months were in February, March, and April. We're almost to the end of the second quarter, and we've really seen a big benefit from the nice volatility that we saw. And when we take a look at the charts, we can see just that. So if we take a look here at NQ, this is the daily chart, and the model performance is based on the intraday trading using the 1 minute, 3 minute guidance, and follows best practices mechanically. And we can see here it really benefits from the increase in volatility that we've seen this year. Here in February, there was a dip in March, but we saw returns actually still very good, and then also in April. And since then, volatility is compressed, it's gotten smaller, and we're starting to see a little bit of a tick up this week going into the end of the quarter. But actually the returns following the rules have still been fairly good. Now, to put these numbers in perspective, we've defined the starting point here as 10,000 at the start, which is an amount based on the historical model performance. So the key thing for us here is that the amount of equity required to trade one lot starts with the margin requirement, but since that can be as low as $500 per contract, we also want to add some space, right? We want to take a look at historical drawdowns and help us to identify a safe amount of equity to have set aside. So this 10K per contract value leaves a very large amount of room for prices to move, and really should make trading the signals a lot easier psychologically. And even based on 10K, we can still see, even in like a month like May, which was a little bit quieter, it's still almost doubling the 10,000 starting value. So all the way through, it's trading one lot, and you can see that there's really a lot to be excited about for this year. Since the reports were prepared on a weekly basis, we also have the weekly gains and losses. Having the weekly gains and losses kind of displayed this way, we can see here a little bit more granularly how the returns are distributed. And we can see here one of the key characteristics of the system is that you can see here in February where things are good, a lot of that came from one particular week. It was a little bit more evenly distributed in March and April. And we've had a couple weeks in the last couple months when volatility was compressing that was almost break even. But that is break even including what we are accounting for cost of trading. So that's going to be round trip commissions plus giving up a tick on each side of the trade. Now, one of the things that we're really proud of this year, but we certainly don't want to suggest that this is an average sort of experience, is that there hasn't been a red month and there hasn't been any red week this year. So we also prepared the daily model performance so that we can get a better idea of what it might really be like trading with the signals. On a daily basis, there were, of the 120 trading sessions, there were 86 sessions that were positive. So year to date, that was about 70% winning days. Now, again, this isn't meant to be an average. This is just year to date. And I think the key things that we can take away about the characteristics of the system is that we have very tight risk management. You can see here only 9 days all year where the that saw a loss that exceeded 500. The biggest minus day was 960. And then another thing that you can see about the characteristics of the trading system is that, again, it can be a little bit lumpy in terms of where the returns come in, because where we have 27 days that contributed more than 1,000, if we took those days and added them up, it contributes a very large portion of the returns. Now, what that tells us is that when trading is good, that we really need to be there and we have to actually follow through and take the big winners. There's certainly going to be chop, there's going to be losing days, and when we take a look at the trade by trade report, we can see here that actually only 45% of the trades are winners. And the reason why this can be profitable comes in two parts. First is the risk management. We can see the average losing trade, it's much smaller than the average winning trade. And these two things kind of go hand in hand. Having tight risk management allows us to stay in play even when things are kind of choppy. As we saw in May and June, things were kind of quiet. Volatility was compressing, and there were still enough opportunities, albeit maybe less evenly distributed. You might have a lot of days where the market not go anywhere. It's opening up on a gap and trading there all day. And one of the days we have make most of the returns in that week. Okay, so those are some of the key takeaways from the metrics. So we're going to take a look now at how these reports kind of come together for each week. Here's one of the reports. This is last week, so we can see here it's trading one lot, $15 cost per trade, and it's the 1 minute, 3 minute. Now, if we go back to the software, we can take a look at how the report is created. Clicking here for format symbol, I've already loaded in the 1 minute, 3 minute chart for NQ, and end date is 6/22 for last week. And if we go back to the 18th, I'll show you how the price action started out. So here's the morning, and actually if we gotta click on VPT here, we gotta set a couple things up. So for contract size, we've got one, here's the 15 and the 20 point value. And if we go to the morning here, we start off, and we can see here in the morning there was a buying opportunity coming into the open, and we might have tried buying it here. Obviously now we can see that that would have been incorrect, but just following the rules, we can see here prices closed here above the dots, real close to the dots, and it does go along with the major trend direction, and it would have been stopped out. So we're going to click here for the stop at the previous level of dots, and going on, we see here prices are continuing down. This is way extended, but as prices pulled back, we do have agreement now. So the 3 minutes basically telling us to go short, and the 1 minute is also it's pretty close to the dots, and we see here prices tried to continue down, failing to break through, and here would be the exit. So again, stopping out here. So we just go through, we put in all of the winners and the losers, and ultimately we want to see what the characteristics of the trading signals are. So here we still have what we think of as a no trade zone, because as prices are just starting to come in past this threshold here, we need for a few bars to basically settle here before the signal is settled there. So when we have here, we have the close here of the bar, we'll go ahead and pull the trigger on the buy signal there for agreement. We see here prices start in the right direction, comes pretty close to the previous level of dot, but seems to bounce and takes out the high a little bit here, and then I remember it failing to continue, so we would stop out here, which would be at the half. All right, and then continuing along, we see here prices come down close to the 3 minute support and start back up. And so as prices have held the 3 minute support, we're looking for a second chance. It's really looking for prices to break through the previous high, which it does here. And it's really, kind of choppy here in this area. I remember this being, just before a big move. So we can see here how the signals really would have helped us keep us in. We can see by this point here, the dots are basically above the entry price. It's securing profit, or basically ensuring that the trade isn't going to be a loss. And ultimately the trade comes off here where the bar turns red. So we put in the exit there. And we take a look at the report now. There's just a few trades in there now, but we can see here how the signals are created. And then just finally coming back to the report, we can see here, here's the completed report. So hope this was helpful. We're going to continue producing the reports and including all the winners and losers, so you can kind of get a sense of how the signal should be performing if we follow best practices. If you liked today's video, I hope you'd give a like on YouTube. And if you have any questions or additional questions or comments, feel free to comment or just email us, and we'll be happy to help. I hope you have a great rest of your day, and we'll catch you in the next video.